Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, June 2nd, 2008. Well, again, folks, just an unbelievable market, and I know I've been saying that a lot the last few days, but that's what it is, and I just call it how I see it. When you look at what happened in the markets today as compared to what happened yesterday, you have to kind of be a little more on the skeptical side for a possible bounce coming in the markets just based on the reversal today alone. Now, what did we see today, folks? And we're going to go over the charts. I want to look in depth today on the monthly, the weekly charts, the daily, the 60-minute charts. I want to look at oil and how oil is the only thing in this market that matters. And I know that seems crazy. I mean, when have we ever heard about one commodity out there? That's it, one commodity, and the whole market either goes up or down based on that commodity alone, and up or down huge on that commodity. But that's what oil is for this market. Okay? And what do I mean by that? Well, the market was kind of ho-humming along today, and oil on the inventories this morning, made a little bit of a move up, and oil was up about $1. It began to come back down from basically $1.50 early afternoon to around $1.80 higher on the day, and the market was basically moving back to the flat line as it came in, and even with oil up about 80 cents there prior to the 2:30 close on spot oil, the markets were basically flat. The S&P futures were down about 2 points, which is virtually nothing. Well, all of a sudden, right before that, you saw the oil, right before the oil close, you saw the oil trade just shoot up huge. USO ran, and I'm going to show you the chart on the USO here as we get into things. Let me flip over to that USO intraday, and this is exactly what you see here. And as soon as this happened, the market started to sell off and sell off hard. And this is all it is, folks. You watch this chart right here, you're looking at the intraday USO, or look at the daily, either one. Doesn't matter, and I have the monthly up there just because I was analyzing that before we started, and we're going to go into that as well. But looking at the daily here, this pattern is an inverse of the markets. This spike up in the markets was a major spike down, and sure, let's take a look at that. Let's look at the ES, the S&P futures. Here's that move up as oil came in, and then when oil spiked, bam, and the markets did not stop selling. Oil just kept on going. Oil ended up about $3 on the day. Now, a lot of us would say, well, $3 is a lot. Yeah, but it's not huge. Why did it cause such a massive sell-off? Well, everything is magnified. $130 oil was negative for the economy, and everyone said, yeah, this is bad. I hope it comes down. 135 oil was a little worse. Oh, man, this is getting a little tougher. I hope it comes down. 140, 145, we're almost to 145 now on oil, and people are getting scared. Folks, this is killing the economy out there. You guys know, I don't have to tell you, when you fill up at the gas tank and it costs you $50 to $100 to fill up a tank of gas, when you go to the store and you see the inflation in food prices, any people in the middle class are getting creamed right now, and the lower class, it's just getting creamed. And the higher it goes, the more likely spending just comes to a halt from the consumer, which has been the backbone of this economy for who knows how long. 10 years, 15 years, 20 years, 30 years, whatever it may be, but it is all coming to a halt, and you can't blame them. With oil this high, it's impossible for people to stockpile anything for retirement, let alone wonder if Social Security will even be around in 5 to 10 years. So, I mean, and I'm going a little bit off on a rant and rave here, but you guys get my point here. This is oil is it, oil matters, and this is what we're seeing here today. So again, let's take a look at that USO chart and just compare again. So you had oil moving up on inventories, oil coming down, the market rallied off that, and then oil spike. So oil going up, down, spike. Let's look at the inverse on the ES. Alright, oil going up on inventories means the market went down, then oil coming in means the markets went up, and then the spike here and the sell-off. So you see the inverse chart, it's almost identically inverse to the overall oil chart on the futures, on the S&P. Doesn't matter, you look at the Dow, you look at the NASDAQ, it's the same chart, the same actions off of oil. So now let's take a look here and go with the intraday. So nonetheless, I pretty much explained this intraday chart. I really want to focus in a little more on some other charts. So we're going to flip to the 60-minute on the oil chart and kind of get a general sense of where we are. Because really today, we thought we may have seen a topping out pattern on that oil, but let's face it, we did get a break up today, and it was a pretty powerful break. Now, the one question I have is, are they keeping oil high into the July 4th travel weekend? And not only that, but you guys know, I mean, oftentimes you see oil, a big driving or travel weekend or long weekend in the United States, you often see oil stay up high. So the question has to be asked, well, are they just keeping it up for this holiday here? And are they building in a premium for, there's always a terrorist premium going into a major U.S. holiday. And that's the other thing we have to realize, is that going into any major holiday, whether it's Christmas, whether it's New Year's, whether it's July 4th, whether it's President's Weekend, whatever it may be, a long weekend like that, there's always a little bit of extra premium built in for, hopefully it doesn't happen or it never will happen, but of that terrorist activity. So you have to constantly keep that in the back of your mind. And does that mean that after July 4th we see oil come down? Who knows? A lot will depend on the dollar. Tomorrow's going to be a big day because you got the ECB, and that's the European Central Bank, and they're expected to raise rates. If they raise rates, it's going to keep oil, the dollar weak like it's been, and oil high. Should they not raise rates, which would be better than expectations for the rest of the world, or especially the United States and the dollar should rally against the euro, and that may put pressure on oil. But again, this is all up in the air. The expectation is that they raise rates right now, and we will have to wait and see. So you have all these factors working against oil coming down, even though oil is extremely overbought right now. It's a bubble. There's no doubt about it. There's no lines at the gas station. There's no demand. There's no super demand where you're waiting in line. And what that's telling you is that it's a bubble. When you have that, it's not supply and demand based. What you have instead is basically speculation, a bubble. You have geopolitical forces forcing up oil and all those other things, and that's what's having it high, not demand per se, which means it will come down. The question is, how high does it go? And we will have to see. So let's take a look at the daily charts here of all this stuff. We'll first look at the SPY, and then we'll look at the USO. Now here you have the S&P Futures daily, and you can see the bottoming tail we had yesterday, which gave us a little inkling that we might move up, and then you had the down move today. So we're still on a key level here, and I'm going to go to the SPY to really show it. So you had a big engulfing candle to the downside. Now what we're going to watch for is a break of that low, which also coincides on the daily as a break of the low from January and March. And this is the key, guys. The more we hit on that, the more likely you could break. Now, InTheMoneyStocks.com and this is where it gets really, really weird, because InTheMoneyStocks.com, we've calculated, and we're coming up with a turn date here for a bounce in this market, a significant bounce, right around tomorrow through next Monday, Tuesday-ish, or really early next week. Tomorrow could be that iffy day where it's kind of just a flattish day, but we'll see. But nonetheless, next Monday, Tuesday, where there could be some sort of start, and it's just a start to a possible move up, but a lot of things we're seeing here in the markets are telling us, wow, the move down today, that's not a good sign. So we really have to be on alert here, and you want to be cautious in finding. Remember, you're trying to find a falling knife here, and we're trying to find that too. And we're going to kind of dip your pinky toe in, your little toe in the water, and you want to see if you can find that. That's what we're going to be doing. And again, obviously, consult your financial advisor. We're just telling you what we do here at InTheMoneyStocks.com. But again, not a pretty day on the downside here as it wiped out the yesterday's up move. But at the same point, we're still holding this low. And if you flip to the weekly chart and the monthly chart, you can see it even better, and I'm going to do that right now. Okay, here's the weekly chart of the SPY, which is basically mirrors the S&P 500, and you can see how key of a level we're at right now. And the other day, before we had the reversal yesterday, I talked about this key level as being unbelievably important. And you can see it right here, folks. Look at this. This is where we are, and this is an ugly move. Now, the one thing that scares me a little here is going back on the weekly, you have an M pattern here, and the question was this the A? Or is this the bigger A, or is this a WV? And there's a lot of, again, and that's why we talk about having such a key level of needing to watch the charts and what a pivotal point this is. So, you talk about pivotal points in a market, in the indexes in the United States or in the world. This is it, folks, and the charts are showing us this. The pattern here is a very iffy pattern either way, and it's key, and we'll have to know whether or not we break this low. A little dip below the low of 126 on the SPY would not be that bad. And we did break the low today and went to 125.95, which is good because you want to see the low get taken out by a little bit, and then you want to see a rally and a move back above that, so you get that kind of double bottom, shake out the longs type play, and then you get the move up. But again, you guys can see it right on this chart. There's a lot of pattern formations going on here, and we have to follow them and see. And that's why with our turn dates, this time we're just going to dip the toe in, as you got to be very, very cautious going into next Monday and Tuesday. All right, and I want to show you the monthly as well. Let's take a look at that monthly. And here you have the monthly chart, folks, and you can see here again, you're basically right at this pivot point on the chart, and you have this sort of basically a move here from support, 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 all the way stretching back to 2006. Should we break this area, then in our opinion, you're looking for a move down in this range, which is right around on the SPY 119. which would be a very, very significant fall. But again, our pivot is showing us a possible up move off this, so we have to trust that. But again, trust it with a just dipping the toe in, as this is a very, very scary environment. And let's be honest, folks, it's as simple as this. And I'm going to say this, and I hope everyone is listening. This market will move up when oil comes down. That's all there is. You can't even blame the overall market today on the financials. The financials actually perform better than almost everything else, and I'll show you those charts. And here's the daily on the XLF, and you can see it was down a little bit today, but it actually was up most of the day except until the end, and it didn't even make a new low. You had a bottoming tail yesterday, so watch the financials. Goldman had a fantastic day, up 3.5 points. There were a bunch of them, like Lehman and Merrill Lynch, that had good days, and just keep an eye on these because this was not the reason. Today it was oil, 100% tick for tick in this market. So watch the next 3 days, guys, market trading, all right? Thursday, Monday, Tuesday for a pivotal day. We may start that bounce. We'll let you know as we go. Take care.